Welcome to Conversations, Season 2 of the MTA podcast series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association.
Welcome to Conversations, the MTA's official podcast interviews. We are here in the City of London, having just finished the MTA monthly presentation for the UK chapter, and I'm here with my good friend Simon Smollett. Hello, Simon.
Please
welcome to the show. Simon is an FX and options strategist and technical analyst for Credit Agricole, and we're here to have a chat with him and get to know him a little bit better. We had the privilege of Simon doing a presentation for us on intermarket analysis. So we'll be getting to know a bit more about him. Simon, my first question would be, could you please give us some information about your personal and educational background before getting involved with technical analysis?
Well, I've always been interested in maths, but I started off going to Sheffield University and did some pure maths and accounting. And after university, did the traditional, became a trainee accountant, but didn't enjoy it, though I think it's a good training, and got into the city really by accident. I was looking for an accounting job and got to work for an American investment house. From there, did some position keeping on currency options, eventually did some trading in currency options, managing sales desks, and really a little bit of prop trading. And currently, as you say, I work for Credit Agricole and have been there since 2006. Working on option strategies and technical analysis. During your career, from a technical point of view, technical analysis point of view, which people would you think have been your greatest influences? I think really my boss really started me off, and he was really keen on sort of point and figure. So I kept his charts. And then I started getting involved in it myself. But really, I think John Murphy's intermarket analysis was a real sort of inspiration, because being in the foreign exchange market, we were subject to so many other markets. And John Murphy really addressed that problem in his books, the 1991 book, but it's been updated since then.
Yeah, fantastic work, brilliant work. So, which brings me to my next question. Obviously, Murphy would be your first choice, but if you had to pick 3 top technical analysis books, which ones would you recommend?
Sure, I think Constance Brown, I really was impressed. It's technical analysis for the market professionals, and it's such a good book because she deconstructs things that you thought you knew, like RSIs. She looks at stochastics in a way that I hadn't looked at before. She looks at what it means to deal with these all these technical indicators real time. I think I suppose I also like some of the trading books as well, but I think essentially the most recent book I've read that really inspired me was that. I mean, I obviously look at John Murphy's original text, although it's very old-fashioned now.
We're also talking about Zen in the markets.
Yes, it's an unusual book, Zen in the Markets. It's a combination of that sort of technical analyst and psychology side. There's a guy called Edward Topple, who sadly is now dead, but he was known as the samurai trader, and he wrote a very interesting book, very short book, Zen in the Markets, and I recommend it. It's still out there on Amazon. You can find old copies.
Okay, so in terms of technical analysis principles, if you could distill your market knowledge in a few axioms, which ones would these be?
I think the most important, well, a number of things. I think you should always go back to basics. You should always look at things again from first principles. I think what I learned from doing the MTA courses is that what you think you knew, it's best to really get to grips with. But if I had general maxims, never go all in. It's amazing how confident you can feel with technical analysis, but in truth, this is still a world of probabilities, and ultimately you're looking for good risk reward, and it's too easy to think that you've found the correct level beyond all recognition and go all in. So I think those are issues.
We had I was having quite an informal discussion actually with Simon, quite insightful. And you were mentioning something about technical indicators failing. Maybe you would like to share that with us as well.
I, with a colleague who's also an MTA member over in Switzerland, I've really looked a lot at some of the signals that fail. That, for instance, it looks like the market is overbought, and a lot of people might start selling into it. But in fact, maybe if it's looking overbought, you're better off waiting to see if it might break some of the resistances ahead of the market, or you see a MACD signal turn up, like a daily turn up. And you can imagine there are a lot of managed future funds trying to take advantage of this potential change in momentum, but then look for support nearby, see if it fails, and maybe trade that, because sometimes the market is better traded by some of these signals that look half-hearted, and you wonder if people are just following them because their computer says the MACD's just turned up, when they haven't done a lot of the other nitty-gritty. So look for signals that fail. I think there's value there.
Another interesting point that you mentioned in our discussion was something about being ambivalent, whether you like a chart or not. What's your reaction to that?
I think it goes back to psychology. I think we all, as technical analysts, we're taking in lots and lots of factors. But sometimes when you get that feeling that you don't like the chart, it's probably because your intellectual mind says, I can see this support resistance or this technical indicator giving me this very strong signal, but it just somehow it doesn't translate. You don't feel right about it, and it's often that the body is telling you that this trade is wrong. And this is a typical sort of samurai Zen type approach, where you're looking out for stress, which is the conflict between the mind and the body. So sometimes you look at a chart, it should work one way, but for some reason it just doesn't feel right in your body, in the pit of your heart. It just doesn't feel right. Walk away. Just walk away. It's just leave it for another day.
All right, and our last question, the fun fact. What does Simon do outside of market hours to relax?
I've always liked mathematical puzzles, whether it's technical analysis or trading the markets, but I like playing bridge. I always liked playing bridge for many years. It's one of those card games that I think the world's best card game that isn't played for money. I love astronomy. I think it's great to see Brian Cox now, this new hero for the BBC, promoting it. But I was brought up on Patrick Moore, and I've got quite a few telescopes and a stonking amount of books. And I like playing golf, but I think a lot of us in the financial markets like golf because it's a way to get out there, get rid of all the angst and fear and anger, as they say, and just play something fun. So those are my fun things to do.
Brilliant. Thank you so much, Simon. Thank you so much for the opportunity of this interview. The current interview will be posted on the MTA website as a podcast. And additionally, you can also watch it because it's primarily a video interview under the UK chapter monthly meeting interview archives. Alex Spiroglou for the UK chapter, thank you very much.